Hello there, welcome back to my channel. In this particular video, we are coming to look at relative valuation methods, or what you call market approach valuation methods. And I have already introduced you to these methods. We actually looked at two of them, which are the public company comparables, or what you call comparable company analysis. And then we also have precedent transactions analysis. So those are the two relative valuation methods we are going to look at in this particular video. And this is going to be an introductory video. And so you are not going to deal with the usual format of using Amazon as a case study. We want to look at the general overview of these two valuation methods since this is the first time I'm dealing with them on my channel. And then in the subsequent videos, we can be able to look at the case study using Amazon. So we are going to start. If this is your first time on my channel, please make sure you have subscribed to the channel. And also, if you enjoyed this particular video, make sure you have shared it with others. And also don't forget to like the video so that others can also see it and benefit from it. All right. So I'm going to, first of all, let's insert a cover page here. So open a new tab and also create two sheets by clicking on the plus sign here by adding the new sheets there. So the first sheet, which is sheet 1, let's name it home. And then let's name this one valuation. Okay, so let's make this one comps and then add another one and name it, double click and name it precedent. All right, so under the home, what we're going to do is quickly we are going to remove the grid lines, and so come to the view tab and uncheck the grid lines there. And then secondly, we want to change the fill color here, and so let's come to the fill color at the home tab and change it to my favorite color, which is green right here. And what I'm going to do is to also change the font color. So the font color should be white so that when we type it can be shown right there. And change the font size also to this 14 right there. Okay, so we are going to have our topic here, relative valuation methods. And the first one we are going to look at is company or public company comparables, also known as comps. So right there, we are also going to look at precedent, transactions, analysis. All right, so with this, quickly let's do the formatting. So I'm going to hit Ctrl B to increase this and also a bit more. So I'm going to increase this. And then I can put, can come here and put, let me insert a copyright symbol. So insert tab, I'll come to this and pick symbols here. And I'm going to pick this copyright symbol right here and press insert. Okay, so with that we can close the and come here and type the Gen Z analyst. I'll also bolding that. All right, now we want to insert hyperlinks to these two sheets here on the home tab so that when I can click here and go straight to the particular tab I want to go to. So I'm going to have click on public comparables and click on link here. So come to link, click on the link there, and come to place in this document. This is insert hyperlink. Link to place in this document, and this is come. So I'll come here and press OK, and also come here. So this one, I'm going to select the precedent and hit OK. All right. So that is what we've got there. So clicking on item on my home tab, it will take me straight to the tab. All right. So every sheet that I want to go to, I can just click on here, and then it will take me. All right. Now, why is this particular valuation methods called relative valuation methods? This is because the value of a particular company or asset is based on the market or the relative market value of similar assets on the market. All right, so that is why we call this relative. Relative means compared to another. All right, so that is the reason why we call these valuation methods. So quickly, let's come to our comps and get started from there. So here, the same thing, I'm going to remove, and what I'm going to do is to indicate here comparable or simply comps analysis. All right, and then what we can do is to increase the font size, bolding that as well, and change the fill color to, and also um, change the font color to white. Okay, now comps or public company comparables or comparable company analysis is a particular is a valuation method that is based on the idea that public companies which are similar in nature and therefore share similar risks and returns should have similar values. That is the fundamental idea behind comps analysis. All right. So you are saying that if a particular company is similar in size and therefore share the same amount of risks and returns, then these companies, all other things being equal, should have the same values or similar values. All right, not the same values, similar values. So that is the brain behind comps. All right. So what you are going to do therefore is to have a list of comparable company analysis or comparable companies, which we call peer companies. So I can have here. This is going to be our comps table. So let me have peer companies here. All right. And with our peer companies, we're going to just assume certain companies. So let's say it's National Limited, um, Raju and Co Enterprise, Naomi Partners. So Naomi. Let's also talk about what again? Make it. Make it PLC. All right. So that is what we are having there. About 4 different companies here. Let's add another one so that it will make 5. So let's say ABC Limited. All right, so these are our peer companies. Now, when it comes to comps analysis, as well as the precedent transactions analysis, what happens is that we are saying that we are going to compare the value of similar companies. We are going to compare the value of similar companies and use that to value our target company or the company we are trying to value. Now, the problem here is that there are no two companies that are exactly similar in size or in nature. And so this is where the usefulness of multiples comes in. So we need to look at multiples. Now, we use these multiples, which are actually financial ratios or metrics, to scale our businesses so that we have a common denominator that we can use to value all of our businesses. So let's assume that I'm going to leave this for now and let's make an illustration. This will help you to understand what you mean by comps analysis. All right. Now, before I do that, let us actually understand precedent transactions analysis as well. And so, when it comes to precedent transactions analysis, we are talking about valuing a company or asset based on values that have been paid for companies that have already been acquired or sold in the past. That is precedent transactions. So precedence is actually a law term. It means past case, all right, past event or cases. All right, so here you are talking about past mergers and acquisitions that have occurred, and you are using the value involved in those past mergers and acquisitions or past M&As to value a particular company or asset. So that is the precedent transactions analysis. Then um, the two methods are all market value based, which means that the values we use to conduct these particular valuations are based on values from our markets. And so they're also called current market value based company valuation methods. All right. So that is this, by the way. Now, um, let's put this our explanation into a proper context. Now, the two methods, both methods, comps and precedent transactions, are saying that we need to find the value of other companies in order to determine the value of our target company. All right, so that is what the basic idea is. Now, the problem is that there are no two very or exactly similar companies. Every company is different in a particular way. And so that is where the difficulty comes in. Luckily for us, we have what we call multiples. All right. Now, these multiples are actually financial ratios that we use scale scale the differences that exist among these companies. All right. So what we mean is that you are going to find a particular metric within all the companies, and we are going to use that as a common denominator for all of our company, our comparables. All right, both in the comps and precedent transactions analysis. Now, in my introductory video to business valuation or company valuation, I made mention of the fact that when it comes to these relative valuation methods, we make use of of multiples a lot. All right, so that is where we make use of multiples the most. All right, so that is what we are talking about here. All right. Now, these multiples are usually based on financial metrics such as revenue, EBITDA, and EBIT, or some even use EPS or earnings per share, or other operating metrics. All right, other operating metrics that we use. But the most common metrics we use when we are calculating these multiples are multiples based on revenue, EBITDA, and EBIT. All right, these are the three most common ones. All right. So let's assume that we have a house. I'm going to name it um, house for sale. We have a house for sale. All right. Now, this house we know its square feet. Its square feet. However, we don't know the price of the value of the house. We don't know the value or the price of the house. All right. So with the square feet, we are saying that this is so let me put the square feet. The square feet is actually SQ/FT. All right. So I'm going to close the parentheses and expand this. Okay. So the square feet is say 3,600 per square feet. All right, the house is 3,600 per square feet, but the price we don't know. So let's put a question mark here. All right, we don't know the price. However, we have houses around in the same vicinity that we can use as a guide to determine the price of this particular house for sale. All right, so we are going to have we are going to sample 3 houses. So I'm going to have house 1, house 2. In fact, let's make it 4. So I'm going to select these 2 and use the fill function here to fill down to 4 houses. All right. Now, with these houses, let's assume that the first house has square feet of say 2,300. The second one, let's assume 2,500. The third one, let's assume 2,900. And the fourth one, sorry, and the fourth one, let's say this is 3,100. All right, so I'm going to format this and insert my comma separator there. 0. Now, for the prices, we know their prices because they have already been bought or they have already been sold, and so their prices have already been determined. And so for this particular first one, let's say the price is 250,000. The second one, let's say this is 285,000. The third one, let's say 3,100. Sorry, 310,000. And then the final one, let's put 330,000 here. All right. Now remember, look at this, that the house we are going to sell has a higher square foot or square per feet, or has a higher square feet than all the other comparable houses. All right. And so with comma separator with 0 decimal places as well. All right. Now we have this. So what we are going to do is to calculate our multiple for these particular houses that we know both their square feet and their prices. So let's say that we are going to put multiples here, and that multiple is actually our price, which is P, divided by our square per feet or our square feet. So let's put price also as P there. All right. So we are going to use these two values to calculate a multiple because these houses have something in common. They both have square feet in common as well as price in common. And so we're going to use that. So with this, we are going to calculate that. So we are going to have 250,000 divided by the square feet of this. All right. And then I can format this to 3 2 decimal places. And I can copy this down using Control D. And what I'm going to do is to um, now when it comes, they are actually in times. We put them as times. So what I'm going to do is to hit Control 1. We have done this already in our DCF video. So let's come to this. We're going to open the Format Cells window here. Come to Custom. Hit on the first figure here, which is the 0 here. And what we're going to do is to have open quotes and put X here, close the quote, and hit enter. And that's going to add X to the square feet for us there. And we want to increase this to 2 decimal places. Or in fact, let's remove the decimals right there to 0 decimal places. So these are our multiples. This is what we call multiples, all right? Then we are going to find the average. The average of these multiples. So we are going to have equals average. So as soon as you have average there, you can use the tab key to select our average, and you are going to select all of these, close the average parentheses and hit enter. So that is giving us 109. Okay. So with this, we can be able to calculate the price of our house for sale. So the price of the house for sale now is going to be equal to our square feet multiplied by the average multiple here of the other houses. Also, and so this is giving us $392,439. All right, remember these are all in dollars. All right, so that is the value of our house for sale. Then we can also calculate the multiple for the house for sale now, which is the price divided by, I'll hit enter there, and do the same formatting for this Control 1, or so we can and paste special. The paste special is Alt E S and then format. So we are going to copy the format T and hit enter, and that is going to copy the format here right there for me. All right, so that is how we calculate the price of an item, and this is actually a typical example of precedent transaction because we looked at the prices that have been paid in the past for other houses, okay, the prices of other houses with to calculate our multiples and use that to determine the price of our current house for sale. Same logic applies to comparable company analysis. All right, so that is exactly what we're coming to do here. So we are going to input all the necessary variables that is going to enable us to calculate our. So let me actually delete this so that what we are doing there. So what we're going to do is to come up with all the values that are going to help us to determine these multiples. And the multiples I've mentioned are EBITDA multiple, EBIT, as well as revenue or sales multiple. All right, so that is what we're coming to do. So we are going to have two kinds of data. We are going to have our financial data, and we are also going to have our market data. Now, when we talk about the financial data here, what the items we have here are actually the values we have determined using our own analysis. So that is the data generated by the analyst himself in his financial model. So we are talking about our revenue. We are talking about items such as revenue. Sorry. So we have revenue. We also have our EBITDA value. So these are actually our estimates from our financial model. All right, but this is for illustration, and so we are not basing it on any financial model. It's something we are going to do randomly. All right, so but these are the values we are going to obtain from your financial model. Then we also have net income or net earnings. All right, so these are some of the financial values we are going to have. Then when it comes to the data values, we are going to be dealing with values such as our um, price per share. So I'm going to have price per share. I'm going to have our number of shares, there, and then we also the multiplication of these two is going to give us our market cap, as you already know, market capitalization or market cap. Then after the market cap, we will have net debt. Then after the net debt, we can be able to calculate our enterprise value, which is EV, or let me put it in full, enterprise value. All right, so that is what we are going to have there. So quickly, let's close this gap here, and let's do some formatting here. I'm going to select all of this and insert my green color, and also increase this and do same there. What I'm going to have is to also select all of this and change it to white right there, and then I'm going to format this using Control B, that is to bolden that, and also increase the size a little to 14. So actually I'm going to select everything here and the font size to 14 so that you can view it very clearly. So let me undo that, and then also I can bolden this as well. And what I'm going to do is to insert some border lines here. So come here and insert a thick bottom border line, and what I'll do is to also wrap this particular text down there and put these at the middle. So as for these formatting, you can actually do them on your own. So what I'm going to do is to select all of this, cut this, or let me just copy it in order to avoid overriding my border line there. So I'm going to delete this, and I'm going to put this, I'm going to put it at the middle. This is going to be center across selection. So to center across selection, I'll come to this particular arrow down here, which is alignment settings, click there, and this will open the format cells. I'll come to alignment, and under the horizontal, I'll click the drop down and pick center across selection and hit OK. All right, and then I can close this a little and do the same for this. So what I'm going to do is to remove that particular border there. I'm going to cut this and also paste here. Sorry, that's why I don't want to cast. Sorry, let's rather copy in order to avoid overriding the border. So I'm going to copy that and paste here, and then I can delete this. Then what I'm going to do is to select this once again, and center across selection. So I'll come here, alignment, or you can also open this particular dialog box Control 1, that is the format cells there, come to the horizontal and center across selection and hit. I can also wrap the text here. Wrapping the text, this is net debt and this is enter. So I'm going to select all of this and wrap the text. Increase this a little. And also close this a little. All right. And then I can increase this once again. Increase, and I can insert another border there, which is the tick bottom border right there. Then the last item we want to add here is actually going to be our multiples. Now, I'm going to select 3 and use that, because when you come to the financial data, we have 3 different items. We have revenue, EBITDA, and net income. And so we can use these 3 items against our enterprise value to calculate multiples. All right. So we are going to insert 3 additional one there. So I'm going to have this and also do this as well. Have that. And I can come to the first one here, M here, and type in multiples. All right. Then I can do the formatting right here, bolding that, and also center across selection. Control 1, come to the horizontal and pick center across selection. There is a reason I'm picking center across selection in a moment. So I'm going to have that as well, and I can reduce this. So the first multiple we are going to calculate is our EV to sales. The second one is going to be AV to EBITDA. The third one is going to be our PE ratio, which is P/E ratio. And then color to white once again, and then I can. All right, so now we are set to do our comps. Cut this, copy this, and actually paste here, and then I can delete this one from here. Bolding this. Then we actually add extra space there. All right. Now let's use what we call round between function to be able to derive some random figures for our calculations. So we don't have any financial statements around, so we're going to use round between. All right. Now this is how the round between works. So I'm going to have equals, and what I will do is to have round between and use tab to select that. Then it's asking me for a bottom number. The bottom number here is our minimum number. So for revenue, let's say the minimum should be let's make it 35,000, and the maximum, comma, then the top, which is the maximum number, should be 100,000. So we can make it 100,000. Or let me reduce this or increase this to say 65,000. In fact, let's make it 80,000 and make this one 150. 50,000. So I can close my parentheses and hit enter. Alright, so that is giving me a random number there. So I can copy this and paste across, and that's a random number there. Then I go to EBITDA. I'm going to do the same thing for EBITDA. This should be equal to round between, and the bottom number we will use can be 45,000, and the minimum is going to be 80,000. So this is 45,000 and 80,000. So I'm going to hit enter there. And I'm going to copy this once again and paste down. We are going to do everything later, so just relax. Then we also have our net income. This should be equal to, we have our round between, and let's pick 20,000 as our bottom number and 45,000 as our top number there, and hit enter. And then I can copy this and paste it down as well. Okay, now let's look at the values individually and see what have whether we agree with these numbers. Then we can copy and paste them as values. That is what you do to generate random numbers in Excel. All right, so if this is revenue 130, this is EBITDA, and this is our net income. This is revenue, this is EBITDA, and this is net income. Revenue, EBITDA, net income. Revenue, EBITDA, net income. Revenue, EBITDA, net income. All right, so assuming we agree with these values, so we are going to what? Copy all of this. I'm going to copy this, and what I'm going to do is to paste it as values. So I'm going to have Alt E S. Sorry. So I'm going to have Alt E S V, enter, and this has pasted it as values. So as you can see, this is no longer formulas. So what we're going to do next is to insert our comma separator here and reduce it to 0 decimal. The 0 is right there, and then we can increase a little. All right, so that is that. So for my price per share, I have my bottom number to be 10 and my top number to be 25. I can close that. For my number of shares, I can have 10,000 shares. Sorry. Let's say have round between. And then let's pick somewhere around 10,000 shares to 50,000 shares. Right there. For my market cap is going to be the multiplication of the price per share and the number of shares. Then we can also generate our net debt. Okay, the net debt is actually our short-term debt plus our long-term debt, including preference shares and non-controlling interest and all that. We are not going to delve into that yet. When you are dealing with the case study, which is Amazon, we can deal with all of those complications. All right. For now, we want to keep our assumptions very simple, and so we are going to deal with that. So I'm going to have round equals round between, sorry. So select this, run between using a tab. And for my net debt, let's make it say 35,000 and 65,000. Let's put that and see what we are going to get. All right. So what I'm going to do now is to copy this down using Control D. And I believe this is okay. So what you can do is to copy it again. So I'm going to use Control C to copy, Control C to copy, and you're going to paste special, which is Alt on your keyboard, E, S, which is paste special, and then you are going to copy and paste the values, not the formulas, but the values. So I'm going to have V. Value is V, which is the V underlined right here. And so I'll pick the V there and hit enter. This is how to use keyboard shortcuts, all right? So that is that. Now I've copied and pasted as values. And so I can once again select all of this area here and format as using my computer, or yes, 0 decimal places right there. Okay, now our market cap, as I said, is going to be equal to our share price multiplied by the number of shares. And I can copy this down using Control D. Now the enterprise value, as we already know from our previous video, is equal to the market cap or our equity value plus our net debt. Now this net debt is actually our short-term debt plus our long-term debt, including preference shares, non-controlling interest, and other long-term liabilities, which are actually interest-bearing. And then we subtract our cash and cash equivalent. That is what is giving us our net debt. Okay, so the net debt is going to, or our enterprise value is going to be the market cap plus our net debt. So I'll enter there, and I can copy the formula and paste it down using Control V. All right, so that is the market value there, or the enterprise value there. Now that we have gotten our financial data, market data, we can go ahead and calculate our multiples. Now the multiples is going to be equal to the first one, which is EV to sales, is actually enterprise value divided by my revenue, which is the sales. All right. Now this is giving me this. I've already done the formatting, and I've showed you how to do this formatting in my previous video. How we do it is to hit Control 1. When you hit Control 1, this will open the format cells window here. Come to custom. When you come to custom, scroll up, and then you see 0. When you see the 0 here, click on the 0, open quotes after the 0, and insert your X, close your quotes, and hit enter. And that is going to give us this particular value here. And I increase the to 1. All right. So that is that. And I want to copy this particular format to the right. However, I don't want the enterprise value reference to change when it is copied to the right, but I want it to change when it is copied down. So I'm going to anchor the column reference. And to be able to anchor the column reference, I'll select the cell reference to enterprise value and hit F4 3 times. So I'm going to hit F4 3 times. 1, 2, 3. And that is anchoring my column reference for me, so that when I copy this formula to the left, it is able to do that. So I'm going to copy this using Control. Okay, so let me copy, select this and see. So this is E over EBITDA. That is very good. So I have that. Then the last one is our PE ratio. The PE ratio is actually price earnings ratio. Price earnings ratio. This price actually is referring to our market capitalization, and the E, which is earnings, is actually referring to our net income. So I can copy that as well. This using Control C. select this area here, holding my shift and the arrow keys to select that, and use Ctrl V to paste the formula down. So just like that, we are done with our multiples. So let's look at the valuation of our target. So we have our target company valuation. Now, to be able to calculate the valuation, as we have already done with the house illustration, where there are houses with different prices and different sizes and different square feet, the same way we are having companies with different revenues, different EBITDA, different net income, and so give different multiples. And to be able to have a fair multiple, which is common to all of them, we need to strike an average of these. So we are going to have average here, and we are also going to add maximum and minimum multiples. This maximum and minimum is actually useful when constructing when constructing our football field chart. All right, so we are going to get there soon after we are done with the precedent transactions in our next video. All right, so we are going to have the average of these multiples. So I'm going to have equals average. I can use my tab key to select that, and I'm going to select all of this and hit enter. And this is also already formatted. I'll also come to maximum there, and this is calculated using a max function. So max 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 right there, and I'm going to select all of enter. Then finally I have my min function, which is going to return the minimum value there or multiples. So I say close my parentheses and hit enter, and I can grab all of this, copy this, and paste to the right using Ctrl V. All right, so these are our right. So with this, we can calculate, given any of the financial data of our target company, we can be able to calculate the value, the enterprise value of the company, as well as the market cap. Okay, this is actually market cap. Our financial is the revenue, EBITDA, and net income. We should be able to value our target company. All right, so let's assume that the value of our company is 85,000. The EBITDA of our company is 1,000. I can copy this across. This will not change. So using Control D, and then the net income is also say 50,000. I can also copy this down. With these two values, I can be able to value my company. I can determine the market capitalization of my target company, as well as the enterprise value of my company. Okay, so this is going to be equal to, for the capitalization, it is going to be equal to my net income multiplied by my PE ratio. I'll hit enter there, and then I can copy this to the right down using Control D. All right, so this means that given the net income of my target company, the value, the market capitalization of the company is actually this amount. All right, it's actually this amount, and this is the average amount, $485,801. Then this is the maximum amount. All right, and this is the minimum amount, 365,789. And also, given that I can calculate my enterprise value using the EBITDA value here, this is equal to my EBITDA multiplied by my EV to EBITDA ratio. I can also copy this down using Control D. So this is giving me an average of $520,184, and then a maximum amount of 692,000, almost 693,000, and that of the minimum amount is somewhere around 407,000. All right, so that is the value we are having there. and I can find the difference between these values to obtain my net debt of my target company. All right, so that is that. Now, when you look at this, you could see that I am applying the relevant multiple to the relevant financial data. Now, when you come to the multiples, we have EV to sales. This means that given my sales value, I can use the sales value of my target company against this particular multiple to calculate my enterprise company. Then I have EV to EBITDA. This means that given the EBITDA of my target company, I can be able to derive a value for the target company by multiplying this particular multiple against that particular EBITDA of the target company. And when it comes to the price to earnings ratio, the same logic applies here. All right, I'm going to multiply that by my net income of the target company to obtain the market capitalization. Now, I have already done this in my previous video where I made mention of the various types of multiples we have. We have the market-based multiples, of which the PE ratio or the price earnings ratio is a part of. So we have the price earnings ratio, we have the price to book ratio. Those are all what we call the market-based multiples. Then we also have the EV multiples, the EV multiples. And these EV multiples include our EV to sales or EV to revenue, EV to EBITDA, EV to EBIT, all right, multiples. They are also there. Now, one striking difference between these two kinds of multiples is that whilst the EV multiples have denominators, which are values within the income statement before interest, the multiples which are based on market value are actually having denominators which are after our interest calculation in our income statement. So when you look at this, net income is after our um, debt interest has been taken off. All right. So that is that. EBIT is earnings before interest, taxes, and depreciation. So earnings before interest. So these two values, the same applies to revenue. Revenue comes before interest calculation. So when you look at these, the EV multiples are actually having a denominator that do not include the effect of our capital structure, whilst the market multiples, which are EP ratio, price to book, and other ratios, have denominators that take into account um, our capital structure, okay, particularly interest calculation. All right, so that is what we have there. So just like that, we are done with the valuation of our company using the comps analysis. All right, now in my next video, we are going to look at the precedent transactions analysis. You have subscribed to the channel, and don't forget to like the video and share with others so they can also benefit from what you are learning on the Gen Z Analyst channel. All right. Okay, my name is Ernest and I'm on LinkedIn. You can find me on LinkedIn. My LinkedIn profile link is actually on my channel pages, and so check out my channel pages to follow me on LinkedIn as well. All right, so thank you very much, and I will see you in the next videos.